Hello everybody. Today I am sharing my one of the trading setups, which is momentum trading, and I do momentum trading using candlesticks and point and figure charts. I only trade continuation patterns in this setup, and the method is top down approach, that is considering the relative strength of these sectors and then the outperformers or underperformance in every sector. The concept is to look for support areas in uptrend and look for resistance in a downtrend. So these are the constituents of Nifty 50 which I consider for analysis purpose: auto, bank, energy, financial services, FMCG, IT, media, metal, pharma, private bank, PSU bank, reality. And I also consider Nifty 500 as the overall, to gauge the overall uh, happening in the equity markets. So Nifty 500 always gives a broader picture. It is because Nifty 500 is a combination of all the small caps, large caps, mid caps, and so following Nifty 500 is also gives some idea about the market trend. So for identifying bullish and bearish sectors, I will use candlestick charts and exponential moving averages of 13, 21 and 34 on the closing basis, and exponential moving average of 89 high and low. These are Fibonacci numbers. Now the bullish sectors for me is the time frame for candlestick charts is on weekly closing, and the bullish sectors for me is all prices that are closing above the EMA of 13, 21, 34, and the EMAs 13, 21, 24 are above the channel of 89 high and 89 low. Vice versa, the bearish sectors, the closing prices for those sectors that are closing below the EMAs, and the EMAs are now inverted: 34, 21 and 13, and these are below the channel of 89 high and low. So price closing above the channel and the EMAs are in order of 13, 21, 34. The sector is bullish, and the other way, the price closing below the channel of 89 high and low, and the moving averages, exponential moving averages, are in opposite hierarchy. That is 34 is above 21, 21 is above 13, and all these three moving averages are below the channel. So as per the closing of 8th March Friday, these are the sectors that are bullish. Nifty 50 is bullish, bank is bullish, energy, financial services, FMCG, IT, private bank, and also Nifty 500. And the bearish sectors are auto, media, metal, pharma, bank and reality. So we will check all these individual sectors and understand how I have come to uh, this conclusion about the sectors which are bullish and bearish, and then we will look some individual examples for trending sectors, either they are trending in the downside or in the upside, and then discuss on the trading aspect, identifying the bullish and bearish sectors, and then identifying the outperformers or underperformers in the respective sectors is one part of the trading setup, and trading the actual scripts is the other part. So we will also see some examples that I have taken the examples of those stocks which I have traded regularly when they are in uptrend or in a downtrend, and they have been very rewarding. So we will first analyze the sectors. So here we see in point and figure charts, Nifty 50, and below we have a weekly chart of candlestick patterns on Nifty 50. Here we see whenever the pullback or the correction happens in Nifty 50, the support is taken at the EMA 89, and again the trend resumes. Right now it is sideways, as we also see the triple moving averages, they are not correctly aligned, but still, as the three moving averages are above the channel and all the prices are trading above all the moving averages, I consider this still as a bullish. Secondly, if we see the point and figure charts above, the high made by Nifty as 11,700 somewhere in August, August 2018, and the trend line we draw from the top. Now the price is above the objective 45-degree trend line. Also, we see the bullish counts are open on the upside, and we have targets to 11,400 and 11,800. So these are cluster counts which are open. Unless price goes below this column of X, the price, the upside counts are valid. And we see uh, the last pattern is weak breakout bullish pattern. Now Nifty 50 is broadening, in a broadening phase. We see a buy, we see a sell, and again hopefully if a double top buy, if the price goes above 11,122, it will be a new double top buy. That will be a bullish broadening. So unless Nifty doesn't go below this column of O or doesn't trade below the channel, for me it is bullish. Nifty 500 is also equally bullish, though the exponential moving averages are not aligned. Again, the closing price is above all the averages, and here also we can see trend line drawn from the lowest swings. These are not breached, and a trend line drawn from the above the highest swing, we see prices are above the both trend lines, the upsloping trend line and the downsloping trend lines. So it is a bullish. Nifty auto is bearish. We see on the weekly candle the moving averages are aligned 34, 21, 13, and all the moving averages are below the channel, and the price, closing price, though the candle is green, the candle is found below the channel and the moving averages. So unless it recovers and starts to trade above the channel, it is bearish for me. I will keep looking bearish opportunities in momentum trading in auto sector. Bank is bullish, energy is bullish, financial services are bullish. So this is how I have arrived the bullish and bearish sectors. In FMCG also we see trend lines drawn from the lowest swing and trend lines drawn from the upper swing. The prices are in between. If the column of X goes above this trend line, down sloping trend line, it will again give a new breakout, and we can go and check the FMCG constituents which are outperforming, so we can take long trades. So now we have seen the sectors which are bullish and bearish. Now, how I have traded this earlier, I have taken some examples. So let's see some examples. So these are the examples from trending sectors. Some of the outperforming bullish stocks, that is Bata India, HDFC, Axis Bank, Hindi Unilever, Bajaj Finance, NIT Tech in the bullish stocks, and in the bearish stocks it is Ashok Leyland, Vedanta Limited, Lupin. So let's check the individual charts for this. This is Ashok Leyland chart. We see price taken support, but it did not uh, do much after it has taken support, and again here it has given a breakout below the channel, and this happened around November 2018. So after November 2018 we see this major fall in this is the major fall after November 2018. So once the price is trading below like this, once the price gives a breakout below the channel, so we can go on the point and figure charts and we can look for bearish patterns. Like here there is a high pole is a bearish pattern, and this bearish pattern is happening when the price is giving breakout below the channel. So continuation patterns can be traded, though the early pattern cannot be considered immediately bearish, because there is always a possibility of price again uh, recovering from the support area. But after a major multi-column breakout, which is also a consecutive high pole in the same area, and then we get continuation bearish patterns. So these patterns can be traded once the price is in the bearish area. Vice versa, I see Finance. Bajaj Finance is a very bullish chart. Whenever price is coming to the exponential moving average channel 89 high and low, we see it recovers and the trend resumes. The triple moving average has uh, never been disturbed, and it is always seen in an orderly trend. And even if big corrections happen, the price is taking support, and when the price is coming in this area and bullish candles are forming, we can also see bullish patterns forming on point and figure charts. Secondly, I trade whenever price is in such a trending phase, I trade all the bullish patterns like low poles or double top buy. We see major double top buy and major breakouts happening, and we can ride this trend. When trading such stocks which are relatively stronger in that sector, we can hold the positions for longer time, and we hardly get any exits. So exit can be a bearish pattern, like here a double bottom sell or this high pole. Here also there can be a exit, and again you can resume as it is giving a double top buy. So trading the same stock again and again is more rewarding when it is in a trending sector. In the correction phase we don't get much entries, and even if we get entries and get stopped out, the losses are very small, whereas we can ride big trends either in up or down trend. Another example is Bata India. Bata India, we can see such a beautiful rally right from 550 levels to today. It is closed around 1328 rupees, and whenever we see the corrections happening in those periods also, the moving averages are still aligned, and then once it is taking support above the channel resuming the trend, we can look for bullish patterns in those areas and we can trade them. We can see here, we can, if we take a trade based on a bullish pattern, here a weak breakout bullish is also a bullish pattern. So early entry is possible because it is happening at the support area, and then we get a double bottom sell. So this is a momentum trading where we can hold this position for maybe 10-15 days, and we can again and again keep entering the same stock. Here we got a triple top buy, here we again got a bear trap, and again it is resuming. So the every bullish pattern is tradable, and the bearish pattern in this case should be a exit. So here we get double bottom sell, and then in the entire correction we have no bullish pattern. So this is the correction phase which where we don't get any trades. Even if we get a trade here, a double bottom sell and we get stopped out. A high pull, if it is a exit criteria, then we get stopped out immediately at cost, and again we can go ahead and buy the stock and trade the bullish patterns. HDFC Bank again, this is one of the outperformers in Nifty Bank. So we see major trend since the stock has been trading from the 1000 price levels. Still, it is not shown any bearish sign. We can see the moving averages are still aligned, and this is a weekly chart. A weekly chart gives a much better picture of the trend, and we can trade the trend in a smaller time frame. For F&O, we can go and trade this in 0.25% box size. For cash holdings, we can trade this in 0.5% chart. Just see bullish patterns happening at the support areas and see the trend that we get from a double top buy happening at around 1202, and then we get a double bottom sell around here somewhere. This area, the double bottom sell is 1800, so 600 rupees is the move, and we see the holding time is very less, and this trending moves comes in favor quickly because the bigger picture is in sync. Hindustan Unilever from FMCG. This is also one of the amazing stocks which is rallying. So every time it comes towards the channel, it is in a correction phase. So we can always wait. We can always wait for this correction to get over, and then we can trade the bullish patterns that will be formed on point and figure. Here also we can see a triple top buy which has happened. It has happened above support area. We see a big rally. We can get out at the double bottom sell, again re-enter at the double top buy, and again we get good rallies. So the outperformers will always be in our favor if we trade them in the direction of the trend. Lupin is one of the examples in the downtrend. We see once the price broken below the EMA channel, which is happened here in around 2016, September 2016. From September 2016, we can check. We can check. See, we get lot of bearish patterns. This is August. Here it is support is broken, and from here we get quick big trends. And whenever there are bearish patterns forming, we can trade these bearish patterns in F&O, and we see the positions come quickly in favor because they are in sync with the bigger time frame. NIT Tech again, one of the outperforming stocks in IT sector. So we see a rally from this area around 400 500, this 500 price levels to today again it is trading at 1300 levels. So major corrections don't happen in the outperforming stocks. The corrections happen are opportunity for the traders to go long after they show bullish signs. So it is always beneficial to trade continuation patterns. So this was it. We have one more. This is Vedanta. We see price breaking down here. This is a candle which formed in May 2018, and after May 2018 we can see we get here it is. From this we get big rallies in the downside and big moves happen in the downside. Even this 4 column triangle breakout, we see it is 58 boxes. This is a 5.5% chart. So see the one entire move 58. So this is almost 25% plus swing in one direction. Here also we see major 36 boxes in after we get a breakdown. 36 means it is a 18% swing, and the overall swing is more than 20-25% in one position. So trading underperforming stocks or outperforming stocks in the direction of the trend is always rewarding. Now we can also go ahead and we can keep track of the underperforming stocks in the bullish sectors and the outperforming stocks in the bearish sectors, because this will be very trading these stocks will be very beneficial when the sector turns from bullish to bearish or from bearish to bullish. This is nothing but a relative strength technique which is shared by my mentor, Mr. Prashant Shah. He always talks about trading continuation patterns, and he always advises to trade continuation patterns in the direction of the trend. So the sectors, now as I said, the sectors which do not participate when the market is falling will outperform when the market will rally. And similarly, stocks from underperforming sectors that do not participate in the fall will get much stronger when the sector will outperform. So this is the concept for the momentum trading, and I hope this will help you to design your own setups. So we can scan these patterns on candlestick, and we can go ahead and check the patterns forming on point and figure. And trading continuation patterns is always